This video is brought to you by Awesome, your go-to modern accountants. To get your entire company registration process, including setting up a business bank account, sorted for only £12, click the link in the description. Limited companies, they sound more complicated than they really are. I've had one for close to a decade now, and I'd love to tell you how, if you decide to go down the same route and start one, it can save you money. Hey, I'm Marta, welcome back to All the Honeys. When you work for somebody else, you're most likely working for a limited company. Typically, you're on their payroll and get your salary once a month, right? When you get your payslip, usually on its left-hand side, you see the payments, so the big numbers, hopefully, and on the right side, the deductions. And these are pretty much out of your control. That changes when you become a director of a limited company. Suddenly you can tweak your salary, your dividend payments, and these tweaks can seriously lower your tax bill. In other words, they allow you to keep more of the money you make and give less of it to the HMRC, the taxman. Here's 3 simple ways how it's done. Number 1, control your corporation tax. We'll start from the top, or from the other side of the river, as I like to say. The money that flows into your company, not out of it. So your company's income, not your personal income. Right now, corporation tax in the UK is 19%. You can reduce it by claiming your company expenses. So your salary, that's a tax-deductible expense. Freelancers you use, equipment you buy solely for your company, so things like your laptop or your mobile phone or this microphone, you can claim as an expense too, or an office chair. What else? Training that is necessary for you to do your work, to keep doing your work, that's also an expense. Okay, so what are 3 things that you might not know that will reduce your corporation tax? 1, your personal pension contributions. If you watch my portfolio updates, you know that I contribute to my portfolio through my limited company. That way, I lower my corporation tax. The second thing is national charity donations. Donating lowers your profits and so your corporation tax. So go ahead, donate to your favorite UK charity and lower your tax bill at the same time. And finally, use of your own home. When you work from home, you can easily calculate on the HMRC website how many days per week you use your home for your business, and then claim that as an expense. Number 2, control your income tax. Okay, let's move on to the other side of the river. We've dealt with the company income. Now it's time to talk about the personal income. So what you pay yourself by your company. The first 12.5 and something K per year of that income is tax-free. The next 37.7 is taxed at 20%. By the way, if you're not sure about tax bands and you want to learn about income tax bands, I talked about them in this video. Now, when you're a limited company director, you can decide how to pay yourself. So you can take these 12-something K as a salary and then the rest as dividends. Right now, the first 2K will be tax-free, so you automatically stretch that 12.5K tax-free income to 14.5K. And then the income from those additional 2,000 to 37.7K will be taxed at 8.75%. In other words, when you lower your salary and increase your dividends, you save on income tax. You can learn a lot about tax efficiency when it comes to running your limited company from a good accountant. They will help you understand which expenses you can claim and which you can't. They will also show you how to best pay yourself. And this will be tailored to your circumstances, your particular needs. So no cookie cutter approach, but a close look at your income and sources of that income, followed by what to do with it to make sure you keep it as much of it as possible. When all this comes with a great accounting software, you're sorted. Awesome are the experts in organizing your business accounts. They've helped set up 11,000 businesses hassle-free and will manage business registration, papers of incorporation, and get your pre-approval on the best bank account for your business. Zero paperwork. And a helping human to answer your questions along the way. All this for £12 and only a few minutes. Check out the link in the description of this video. Number 3, control your national insurance contributions. When you work for somebody else, one of the biggest deductions on your payslip, on that right-hand side of it, is most probably NIC, National Insurance Contributions. In my mother tongue, NICs means nothing. And even after close to 19 years in the UK, I still think of national insurance contributions as exactly that, nothing. And nothing is exactly how much you can end up paying in national insurance when you, again, tweak how you pay yourself from your limited company. Let's clarify something first. As a company director, you will encounter 2 types of national insurance contributions. Employees' national insurance contributions and, that's quite a mouthful, employers' national insurance contributions. And there's a trick worth knowing about. Remember that 12.5K I mentioned a second ago? Well, scrap that. If you want to avoid paying national insurance contributions, this is what you need to do. Just like your income operates within tax bands, these contributions operate within levels called thresholds. A terrible, terrible word to pronounce for most foreigners, or maybe just me. So we have these 3 levels or thresholds. The lower earning limit. As long as your salary is above this level, your employment will count towards your state pension contributions, and that's important. The NIC primary threshold, so national insurance contribution primary threshold, as long as your salary is below this level, you won't need to pay any employees' national insurance contributions. And the national insurance contributions secondary threshold. And as long as your salary is below this level, your limited company won't have to pay any employers' NIC. So once you know these thresholds and want to avoid paying national insurance contributions altogether, you need to pay yourself a salary that is below the secondary and above the primary threshold. That's it. Your years of work will count towards the state pension, but you will pay nothing in national insurance contributions that way. Right now, that amount is 9.1K per year. And that's it, guys. These are the 3 aspects that, when controlled, will allow you to lower your tax bill and keep more of your earnings. Hope you found this video useful. Hope you enjoyed it. Thank you so much for watching and see you soon.